Hi guys, good afternoon. It's Raphael here, and I'm just going to share a quick market update. So here we can see we have the economic calendar. So we saw earlier this morning, we had two medium impact news that came out that affected the pound. So we had the average earnings index, which is a change in the price businesses and the government pay for labor, including bonuses. The forecast was 5% and the data came out at 5%. Following this, we had the claimant count change, which was the change in the number of people claiming unemployment-related benefits during the previous month. The previous number came out at 15.3k and the forecast was 17.9k, but we can actually see that it's significantly higher at 25.9k. How did the market respond to this, and why did the market respond to this? So we can see that this is the first indication of the employment situation. This is released a month earlier than the unemployment rate, and although it's generally viewed as a lagging indicator, the number of unemployed people is an important signal of overall economic health because consumer spending is highly correlated with labour market conditions. Unemployment is also a major consideration for those steering the country's monetary policy. So if we take a look at the chart, we can see how the FTSE reacted. So the news came out here around 7 a.m. and we can see this sharp sell-off that took place shortly after. Now, why did this occur? Bearing in mind the unemployment rate is a signal of how the overall economy is performing. When this number came out higher, this meant that more people are unemployed. So this is going to be bearish in terms of the UK outlook. So we'll go back to the economic calendar. And as I mentioned later on, we also have some high impact news that's coming out shortly in just over half an hour. So we have the core retail sales in the US. And this is a change in the total value of sales at the retail level, excluding automobiles. Now, why is this important? This is important because this is the primary gauge of consumer spending, which accounts for the majority of overall economic activity. Consumer spending is very important. The more money consumers have to spend, the more businesses are going to benefit from this, the more the economy is also going to benefit, the more the US dollar is going to be in demand. Now, if this number comes out lower than expected, as we can see, actual greater than forecast is good for currency. However, if this number comes in lower than expected, this is going to put a strain on the US dollar. Yesterday, there was a sharp decline given the fact that President Trump stated he wants to oust Fed Chairman Jerome Powell. We saw that the US dollar sold off, the S&P 500 sold off, and also the US 10-year yields rallied. So depending on how this goes, the US dollar could be in for another beating, or potentially we might see a rally taking place. We also have the retail sales, which includes the automobiles, which accounts for about 20% of the retail sales. Then we have the unemployment claims. This is a number that traders pay particular attention to. Now, why is this important? So this measures the number of individuals who filed for unemployment insurance for the first time during the past week. So this is the nation's earliest economic data. The market impact fluctuates from week to week. There tends to be more focus on the release when traders need to diagnose recent developments or when reading is at extremes. So actual less than forecast is good for currency. So we can see that the previous number came in at 227k. The forecast is 233k. Now, if this number comes out higher than expected, this is going to be bearish for the US dollar. And why is that? That means because more people are filing for unemployment claims in the US. Similar to the claimant count change, if this number comes out higher than expected, we could potentially see a sell-off in the dollar. We could potentially see a sell-off in equities such as the S&P, the Nasdaq, and potentially we might see investors fleeing into gold. Later on, we also have some medium impact news, which is coming out at 1:30 as well, which is the Philly Fed Manufacturing Index. The previous month was negative 4.0. The forecast is negative 1.2. We can see that actual greater than forecast is good for currency, and above zero indicates improving condition, below indicates worsening conditions. Right now, the US is in a precarious environment given the fact that President Trump's tariffs have had a significant impact on the market, and we're only starting to see how this is going to spill over in terms of the wider market. Later on at 11:30 p.m, we have the FOMC member Wallace speaking, and this is important because he's due to speak about the economic outlook and the monetary policy at a dinner hosted by the money marketers of New York University. Traders are always keen to see how FOMC members and other central bankers are speaking, whether their tone is more hawkish or dovish, indicating their stance on interest rates and where they think they could potentially be heading. Any signs these provide, traders will be able to position themselves accordingly. So there's a lot of things happening in the market right now. We're also in earnings season. There's a few earnings releases that are going to be taking place. If we look here, General Electric have released their earnings. We also have Pepsi releasing their earnings, and also Abbott will be releasing their earnings later on. All of these companies are in the S&P 500. So depending on how they perform, we could see how the S&P will also react. And then we can also have a look at some technical charts now. So here, this is the S&P 500, the E-mini S&P 500. And we can see here, this is the 15-minute candle. So we can see that a Fibonacci has been placed from this low this morning, just after 8 a.m. to this high. We can see that the market has retraced to the 61.8% level. And this is a very important level. Traders will be paying key attention to this level to see how the market responds to this. Potentially, this could cause a rally. We see here that the market closed with a hammer candle. We can see that the market is currently rallying. So it'll be good to pay attention to see whether the market rallies and takes out this high. So some of the key markets, as I mentioned, I'll be focusing on gold, equities, the US dollar. It'll be great to hear your thoughts and see what you're thinking based on this economic information. Thank you. Have a wonderful day.